In this video, I'm going to walk you through the top 10 IBKR mistakes new investors make and exactly how to avoid them. We'll use real pages from the platform so you can see where people usually get tripped up, what actually matters, and what you can safely ignore for now. I'm Erin from Your Money Friend. Let's get into it. Mistake number one, thinking low commissions mean you should trade more. The first place a lot of new IBKR users get tripped up is pricing. They hear that interactive brokers is low cost, and almost immediately it creates this feeling that trading more must be fine. Like, if this platform is this cheap, then clicking buy and sell can't really hurt you that much. So let's start here together. Go ahead and click the link below so you're looking at the same page I am. When you land on this page, it feels really reassuring. Right at the top, you see language like minimize your costs and maximize your returns. You see $0 commissions for stock and ETFs on IBKR Lite and very low per share pricing on IBKR Pro. Everything on this page is designed to communicate efficiency. It's telling you this platform is not expensive. You're not getting eaten alive by fees here. And that part is true, but this is where the mistake quietly starts to form. A lot of people look at this page and subconsciously think if trading is basically free, then doing it more often doesn't really matter. Especially if you're coming from a simpler app, this page can make trading feel almost casual, like each decision is low stakes because the cost looks so small. But that's not what this page is actually saying. Low commissions don't mean low risk. They just mean the platform isn't slowing you down. When you look at the Lite versus Pro comparison, or the per share pricing listed here, IBKR is saying if you choose to trade, we'll keep it efficient. It's not saying you should be trading all the time. What usually hurts beginners on IBKR isn't fees, it's behavior. More trades mean more decisions. More decisions mean more chances to react emotionally, second guess yourself, or change your plan halfway through. And those small decisions add up faster than people expect. This is how people lose money even on low-cost platforms, not because the platform is expensive, but because it makes action very easy. IBKR is built for efficiency and not protection, so this page is showing you what's available, not what you should be doing every day. It also assumes you're going to bring your own structure. So the way to avoid this mistake is actually pretty simple. Don't let low costs convince you that more activity is better. Decide ahead of time how often you're investing, monthly, quarterly, whenever you add new money. Pick a rhythm and stick to it. Let the low commission support consistency, not constant trading. Cheap trading only helps if you're not using it as an excuse to click more. The second mistake a lot of new IBKR users make is either not understanding the Lite versus Pro choice at all, or just ignoring it because it feels technical and overwhelming. This is one of those things people skip because they assume it doesn't really matter yet, but it actually shapes how your account behaves more than you realize. So let's click compare, and when you land on this page, it can feel like a lot. You see two options side by side, different pricing models, different explanations, and it's easy to think, I don't really know what any of this means, so I'll just pick one and move on. A lot of people default to whatever sounds more advanced, or they assume Pro must be better because it's the professional option. But that's where the mistake is. This page isn't asking you which one sounds cooler, it's asking you how you actually invest. Lite and Pro are built for different behaviors, not different levels of intelligence. And IBKR doesn't stop you and asks follow-up questions. It just gives you the choice and moves on. If you're investing long-term and you're not trading often, you don't need to over-optimize routing or pricing. If you're placing trades occasionally and holding for months or years, the differences here are not going to make or break your results. What matters more is that your setup matches how you actually use the platform. Where people get into trouble is choosing a setup that doesn't match their behavior. They pick something because it sounds more serious, then feel pressure to trade more, tweak more, or make use of the features they choose. And suddenly, the platform feels heavier than it needs to. This is a pattern you'll see over and over on IBKR. The platform gives you flexibility, but it doesn't protect you from misalignment. If you don't slow down and choose intentionally, it's very easy to end up with something that doesn't fit you. So the way to avoid this mistake is to be honest with yourself, not about what kind of investor you want to be someday, but about how you invest right now. How often do you trade? How simple do you want things to feel? How much do you actually need? Pick the option that fits your current behavior, not the one that sounds more advanced. You can always change later. IBKR isn't a one-time decision platform. It's flexible on purpose. This isn't about picking the right option. It's about picking the one that lets you stay consistent without feeling pressured to do more than you planned. Mistake number 3, using margin too early. The third mistake new IBKR investors make is getting curious about margin before they actually need it. IBKR is known for having some of the lowest margin rates out there, and that can make margin feel less risky than it really is. When you see how cheap borrowing looks compared to other platforms, it's easy to think, okay, this doesn't seem that bad. But margin is still borrowing money. The rate being lower doesn't change the fact that losses are magnified and things can move against you quickly. IBKR doesn't warn you aggressively or slow you down here. It assumes that if you're looking at margin, you understand exactly what you're doing, and most beginners don't yet. The mistake isn't learning what margin is. That part is fine. The mistake is enabling it or using it before you have that clear strategy, stable habits, and experience handling volatility. So how to avoid this mistake? Understand margin conceptually, but don't use it early. For most new investors, a very solid rule is if you don't fully understand how margin can hurt you, you don't need it yet. There's no rush. Margin will still be there later. Now let's click on pricing and go to interest. And that brings me to mistake number 4, which is letting cash sit without understanding interest. A lot of people don't even realize this is a mistake until months later. IBKR actually pays interest on uninvested cash, but only once certain conditions are met. If you're not aware of that, it's very easy to let money sit there doing nothing while assuming it's at least earning something in the background. So when you look at this page, it explains how interest is calculated based on things like your cash balance, your total account value, and currency. It's not automatic for everyone, and it's not the same rate on your entire balance. This is where people get confused. They assume IBKR pays interest, full stop, but the reality is more nuanced. Below certain thresholds, your cash may earn nothing at all, and above those thresholds, the interest is blended, not flat. The mistake is not knowing whether your cash is actually working for you. How to avoid this one is simple. Know why your cash is sitting there. Is it waiting to be invested? Is it part of your strategy? Or is it just left over because you haven't decided yet? Once you're clear on that, this page becomes helpful instead of confusing. Mistake number 5, confusing access with opportunity. IBKR gives you access to almost everything. Global markets, currencies, options, futures, crypto, you name it. And for new investors, that can feel exciting, like you suddenly unlocked something exclusive. But access alone doesn't mean opportunity. The mistake is thinking that because something is available, it deserves your attention. That's how people end up dabbling in markets they don't understand, at times they didn't plan for, with money they weren't prepared to risk. IBKR doesn't filter opportunities for you. It assumes you already know what you're looking for. So the way to avoid this is to narrow your focus on purpose. One market, one asset type, one goal. You don't need to use global access to be a good investor. You need clarity. Mistake number 6, turning learning into trading. A lot of people tell themselves they're just learning, but their behavior looks like active trading. They place small trades, then another because it feels educational. But over time, that turns into constant decision-making without structure. Learning does not require frequent trades. You can learn how markets move without being in a position every day. You can learn how orders work without changing your portfolio constantly, and you can learn the platform without risking real money on impulse. The mistake is using trading as a substitute for patience. To avoid this, decide how you're going to learn before you log in. Are you reading, observing, placing one intentional trade per month? Structure turns learning into progress instead of stress. Mistake number 7, not setting personal rules. IBKR will not set rules for you. There is no pop-up that asks how often you plan to trade, no reminder about your long-term goal, no warning when you deviate from your plan. That's a feature, not a bug. But it also means that if you don't set up your own rules, the platform will happily let you react, overtrade, or change direction every time the market moves. Rules don't have to be complicated. How often you invest, how much you invest at a time, what you are not touching yet, those rules protect you when emotions show up. Without rules, every decision feels urgent. With rules, most decisions disappear. Mistake number 8, thinking more tools means better investing. IBKR has advanced order types, algorithms, analytics, and research tools, and a lot of beginners assume that using more tools makes them more serious. More tools only help if you already know why you need them, otherwise they just add noise. The mistake here is trying to grow into complexity instead of growing into consistency. You don't earn complexity, you arrive at it naturally over time. If a tool doesn't solve a problem you already have, you do not need it yet. Mistake number 9, comparing yourself to professional users. IBKR is used by institutions, hedge funds, and very experienced traders, and it's easy to forget that when you're looking at the same platform they are, the mistake is assuming you should behave like them. Professionals trade differently because their goals, time horizons, and risk tolerance are completely different. Trying to mirror that as a beginner usually leads to frustration or doubt. You're not behind because you're not using advanced features. You're right on time for where you are. Mistake number 10, thinking you need to master IBKR quickly. This might be the biggest mistake of all. IBKR is not meant to be mastered in a weekend. It's meant to grow with you over years. It gets easier because you learned what to ignore. The mistake is rushing. You don't need to understand everything today to be a good investor. You need clarity, patience, and the discipline to stay consistent. Everything else comes later. So if you take one thing away from this video, let it be this: IBKR doesn't reward activity, it rewards alignment. Most mistakes new investors make on this platform aren't technical, they're behavioral. They come from assuming you should use everything, trade more, or move faster than you're ready for. You do not need to do that. Use IBKR slowly, intentionally, with rules. Let the platform work for you instead of pulling you in constant decisions. I'm Erin from Your Money Friend. If this helped you avoid a few early mistakes, you're already ahead. Thank you guys so much for watching, and I'll see you in the next one.